Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you. We are going to talk about the reversal yesterday in AutoZone and Advanced Auto Parts. We have earnings from Target, Tiffany, and Lowe's we want to discuss. We have some weakness in the S&Ps this morning, as you can see on the chart. We're going to go ahead and attribute that to continued North Korea talks. Will they happen? Will they not happen? At this point, who knows? Our guest today supposed to be Ryan Craver. He had to reschedule his flight, though, so we are going to be joined by Sean Udall, the CIO of Quantum Trading Strategies. He'll join us at 8:35. Joel, what is happening this morning in the S&Ps?
Ed, we are in the red, deep in the red. 20 handles here at 27.06. Even a weak close, couldn't clear the close. Let's talk about your pre-market low, 0450. That matches your 4-day low. 2750 is last week's low, and that's the last number I have on my sheet. So I'm going to have to do a little bit more homework here. But holding 2700, critical for the market this morning. You have crude trading in the red by 48 cents. Just like stocks, we talk about whole numbers. Well, whole numbers held up yesterday as crude stalled just ahead at 73 at 72.90, trading down 48 cents and under yesterday's low. Next support point in crude, 71.32. Gold on the rebound up 370 at 1395.70. Silver not following suit. And let's look at Bitcoin here. Bitcoin futures are in the red as well by $300. Under 8,000. Folks, look out for you Bitcoin traders. We are on big support at 7,800. Dennis, are you dipping your toe in the water here finally at 7,800?
Yes, I am. I was just trying to find the unmute button, so I had full intentions to unmute myself, and I was like, where is it? I can't find the mute button. I can't hit it off. So anyway, no, am I dipping my water in here, my toe in the water here right now on the S&P? Is that what you're asking me? Like buying right now at the market?
No, Bitcoin.
Yeah, both.
Bitcoin. You're asking me Bitcoin?
Wait, Bitcoin or sorry, I may have misheard. Was it Bitcoin?
Yeah, Bitcoin.
Yeah. Where is Bitcoin? Where is it? I'm having it on my screen. Where is it again?
7,800.
No.
Okay.
You know what? If anything, everybody's saying Bitcoin Cash is the place to be here now. So I don't know. You have the big, perma bull Bitcoin players now talking about Bitcoin Cash instead. It's exactly what we said. We've been saying for a long time. Even if you believe in crypto, how do you know that Bitcoin is the right investment in the crypto world? There's going to be better stuff coming along. All the big boys are saying Bitcoin Cash is a better one now. So I'm not a fan here of Bitcoin whatsoever. If I was in crypto, I think I'd be going and following the big boys in the Bitcoin Cash, but I don't like any of it.
And is this the pullback for you that you're buying to take the market back up to do all-time highs?
And here, so we get a little pullback here this morning. And what are we attributing this to, Mr. Spencer Israel? What are we saying is the catalyst here for today's sell-off?
I thought we were saying that Trump said that the North Korea summit may not happen now, but I don't at this point.
So trade war back on.
No, not that. No, that's not what he said.
Although the market thinks. We got a little tension. What if we get the trade war back on? I think that's what we're attributing it to. Worries that escalating, not as nice over there equals trade war.
Exactly. You know what? Remember the when you used to do clap on, clap off, for the lights?
Yeah.
Do you remember that? That's
what. I was too cheap to buy that, but I always wanted it.
Okay, so that's what it is. That trade war on, trade war off.
Clap off. A clapper. I remember.
Yeah, that's exactly what this market headlines moving the market again, and you just have to look at. There's no fundamentals, no real technicals. It's just a headline-driven market.
Yeah, that's all it is. And the market's looking for the next headline to drive price. We're coming out of earnings season, so we can't be looking to the majors to report, although we are still in the heart of retail earnings season, which we will get to here in a second because we got some major retailers reporting this morning. But still, you know, the major headlines here are coming from Trump. We know Trump's Twitter handle can move the markets very quickly, so you got to watch that. You got to follow Trump. Also, so speaking, you know, of other things moving here too, looks like Dodd-Frank gets passed by the House there, Spencer.
Yeah, well, the Dodd-Frank rollbacks, yes.
The Dodd-Frank rollbacks
are being
which is supposed to be good for banks. Now, multiple things. So on this news last night, the banks started blasting off into orbit. If you look at last night's trading, Bank of America was trading up almost 1%. Citigroup was up almost 1%. All these banks trading significantly higher. Two things have happened here this morning. One is that we had the market rollover. So you're not obviously seeing the banks roll over with the overall market. Second thing is the TLT has rallied significantly. We know that is bad for banks too. So you basically have three factors involved. Dodd-Frank wants to push the banks higher, where you've got the market overall and that wants to push it lower, and the TLT rising wants to push the banks lower. So who wins? I don't know. Right now, the banks are trading slightly in the red. So they're up a little bit more than the overall market, but still trading in the red. So, and then Joel made a good point. Was this all baked in for the banks as well? Like we kind of knew they were rolling back. Dodd-Frank gets passed by the House. How much of this was already baked in? So banks will be an interesting trade here today. I'm going to look at them at 9:30, right when they're open. Let's see, you know, where they open. The majority of them watching your Bank Americas and your Cities and your JP Morgan, and see if they can hold those opening prices. See if they can catch a bid. They could show some life then. But just keep in mind, on a normal day, I would say today is the day to probably sell banks because the market's weak and TLT is very strong. But because the Dodd-Frank is a wild card, I don't know who's going to win. You have positive factors and negative factors, and that's to be determined by the market.
Do you want to set super extra good level in the XLF if it gets up there?
I like the super good levels, Joel. Give them to me.
28.50.
It was trading there last night. It was trading there. And I actually just put on some pairs trades last night. So I was buying a few banks that weren't up as much, selling the banks that were up a little bit more. Trying to unroll those this morning. We'll see how that works out. But I did see XLF up at 28.50 last night. That was kind of fair value because a lot of the banks were up 1% last night. But XLF's always a funny one because it never is up as much as if the banks are up, it's never up quite as much. If the banks are down, it's never down quite as much. And why is that? Because it's not a pure bank ETF. It's got like Berkshire Hathaway in there, huge chunk. It's got a lot of insurance companies in there. It's got a lot of different types of financials. It's not a pure bank play. If you're looking more pure bank plays, you know, you can look at like the KBE or the KRE. Those are more pure bank plays as opposed to the XLF, which is financials altogether.
Okay. All right. I just went general with the XLF. Let's just do heavily traded stock. Bank of America. Let's see what we got going in Bank America. That has a super extra important resistance point too. And that's the 3130 area. You hit 31, what you hit yesterday? Yesterday you hit 3114. You have a double top from last night at the 3130 area. It also had a gap down at 3149. But yeah, if this gets around, we're under 31. So probably sellers will be ganging up at that closing price in Bank America at 30.89.
Just looking here at a few other stocks that are moving. Let's jump over to the retailers there. A lot of retail earnings here from this morning. There was some from last night too, but I want to go to this Lowe's report. We know Lowe's had a wild ride yesterday. They got the JCPenney CEO, rise all the way up to 90, opens right at the high and just pukes it all out. I did not get it. You did not get it. My buddy from Bright, I was talking with him. He did not get it. Nobody understood why it was trading up $3 on getting a JCPenney CEO. I think I even tweeted out. I was like, well, he did so well with JCPenney. He's got to do well with Lowe's, right? That's my sarcastic tweets there if you didn't catch that. But anyways, gave it all back. I wish it would have shorted the open. It was easy money. Now it's different. Now you got this earnings report that actually looked somewhat disappointing. They hit it. And now they're rallying it. Man, I cannot figure this stock out. It seems to rally on potentially bad news, or it seems to sell off on potentially, good news, rally on bad news. I can't figure this thing out. Spencer, give us the details. Lowe's report at 6 o'clock this morning. It's had lots of time to digest the numbers. It's had lots of time to trade. It's already traded 156,000 shares. Talk about those numbers.
Wait, just real quick on Marvin Ellison, the CEO. I was also wondering, like everyone else, why the stock was getting up. So
it's too logical, though. It's
think
just too logical. It's like the logical trade that works.
But he worked at Home Depot for 12 years. So he was an executive.
Inside scoop. Spencer, dig it deep.
So
Spencer, you're the man.
So you think, 12 years at Home Depot, you probably
got the scoop on the competition.
You probably know
how he's going to bring it. We were just complaining about this on the show yesterday, saying how this service at Lowe's is not as good as this service as Home Depot.
Well,
so maybe he's got the secret sauce coming in.
All right. There's always a reason. There's always a reason.
That's why we pay Israel the big bucks.
Oh yeah, right. All right. Lowe's Q1 EPS $1.19. That missed the $1.25 estimate. Sales 17.4 versus $17.63 billion. So a miss on both the numbers for Q1. The fiscal year EPS guidance light. $5.48 is the estimate for the fiscal year. Actually, mostly in line, I would say. $5.40 to $5.50 is the range they gave for the fiscal year EPS. So I guess pretty much in line there. Comps for the fiscal year up 3.5%. That's the guidance they gave on that. Sales for the fiscal year up around 5%.
So the numbers weren't that great. The stock got hit hard this morning. Where do we get down to, Mr. Alconin?
Oh boy, we got all the way down to 82.50.
And now we've rallied all the way back up to 88.60. These whipsaws on these earnings reports are absolutely incredible. Like, did you see those AutoZone and Advanced Auto Parts yesterday? Like, what the heck is going on? They look like good numbers. They must have said something on the conference call, or I don't know if they said this is going to be a one-time event to beat the numbers like this, but holy cow. Having opened over $700. It collapsed in the first 20 minutes. It gives it all back in the first hour, then loses another 60 points. It moved over 100 points down. That candle almost looks like it doesn't even belong on the chart. You got literally a candle on AutoZone, 710 the high, 601 the low, 109-point range on that earnings report after being up 40 points, ends up down 60 or something like that. Advanced Auto Parts doing the exact same thing. AAP opening up right near the highs, puking it all out in the first 20 minutes, all the way down to the low, like in the 113 handle, bounced a little bit at the end of the day, but here they are. Good report. Sell those off. Lowe's looks like a crappy report. Let's buy that one. This market still fades logic.
And Dennis, I would have given $1 million to be on live with our chat, quoting and following that price action. That would have been so much fun to quote that price action. Over $100 move. I'll just alert our traders that AZO is traded down 2 sticks here at 600 even, and you got
that
one
feels
level.
Like flat when you're down.
After
you were down. After I had a 100-point range, it was like 2 points. What's that?
What the heck? But you're coming into a potential area of support. 601. Not that I'm buying it. 601 was you got a pair of lows surrounding 600 from late April. And then just as you can see your dailies, 95.29 and 90.76. So potential areas of support. But, man, they got to split their stock. This is their own fault, okay? They have a $700 stock that, traded $1.9 million yesterday, but it trades less than $500,000. Get some liquidity in your stock. I mean, they should go 10 for 1 and have a decent stock. I mean, it might have still had this decline.
It's the cool thing to do, Joel, have the high price stock now. The market turned. Berkshire Hathaway was the one that never split. He was the only one back in the day. Now it's the cool thing to do to not split your stock. Just buy less shares. So I don't know. Like I like lower price stocks there too, but and this thing like trades like with 3, 4, 5 point spread. So it is wild. But I guess when you consider
Have you ever traded it, Dennis? Have you traded it?
I've traded AutoZone. I've traded I've traded everything, Joel. I would trade it probably with lighter size. It might even be odd lots I would trade that with, because 100 shares is 60 grand floating around. It depends. I mean, it depends on the size, but I've traded it a few times. It's not one of my go-to bread and butters, though. You know me. I like the thicker, boring stocks. I don't like stocks that could go around a 100-point range. That's a little bit out of my wheelhouse. My wheelhouse is the GEs, the Bank Americas, the Morgan Stanleys, the Goldman Sachs, the Fords, GM, I'm boring. Boring pays the bills. And I will tell you again and again and again, been in the business for almost 20 years professionally. All of my net worth has been created from day trading. 100% of my net worth basically created from day trading. I did do some roofing when I was younger, but majority of it all created from day trading. And I did that by trading boring stocks.
All right. Let's a stock that's not boring. Target getting laid out this morning. Spencer, give us the numbers on the retailer.
Wait, Dennis did some roofing, and he also owned a sandwich shop. But what was it? I'm forgetting now.
I've had some diversification in my life. Yes.
That's how you like. Hey, how
My dad,
you own a
my dad
sandwich?
owned a
Don't forget you
company.
own a sandwich
That's
shop.
where that came from. And so I worked for that for years. Did the roofs. Yeah, I did the roof thing. And yes, I did the Quiznos thing.
Quiznos, that's what it was.
buddy,
Quiznos.
Tommy was the manager of Subway, and he's like, I tell the Quiznos story. Tommy was the manager of Subway. He's like, Denny, this Quiznos, this is awesome. The sandwiches are amazing. He's like, let's buy one of these things together.
Yeah.
So I'm like, yeah, I've got some money. You're going to run it? He's like, oh, yeah, I'll run it. Okay, cool. I'm in. I'll go 50-50 with you. You run the show because I'm trading stocks.
Yeah.
And when I got a better job at the bank and stuff after we already have purchased a franchise. So we have to hire managers, do it all. And actually, I found myself working in that sub shop for like a month. I'm going to kid you not. I took a time of leave from trading to get the sub shop open. And I'm sitting there on the Quiznos sub line thinking, where did my life go wrong? Where did my life go wrong? Here I was in a cushy desk job, working in Detroit, day trading stocks, playing video game for a living. And now I'm asking, what kind of sauce, what kind of sandwich they want, throwing on the buns. And I was like, where did nothing against, those are good jobs too, but I think I like my day trading job a lot better than working on the Quiznos subline. So anyways, after about 3 weeks of that, I was done with that. And I threw it to the wolves, and the wolves ate me for breakfast. Stole like 10% worth of food a year. And it was just a mess.
What about your solar project?
I got a lot of little things, eh? Yeah, the solar project's still good. That's a good one. I got that on my dad's warehouse there. Yeah, it produces. That little solar project just pays $1,000 a month. Every month pays $1,000. It was 62 grand to start, pays $1,000 a month. It's pretty good. I'm like 6 years into it. I've already got my money back. Now it's gravy. And I have another like 15 years worth of contract or something, or 14 years left with Ontario there. So that's a good little deal.
Good deal. All right.
Solar.
Anyway.
I like solar.
Got us on a tangent. I'll bring us back to Target though.
You really put me on a tangent there. I just told my whole life story. Now you know everything about me.
That's all right. Target
stops, roofing, solars, and day trading. So I guess I was wrong when I said most of my net worth came from. Actually, no, more than 100% of my net worth probably came from day trading. I lost a lot of money in the Quiznos.
Right. All right.
The solar worked out. The roofing is okay.
All right. The Q1 EPS on Target, $1.32 that missed a $1.38 estimate. Sales 16.55 or 6. That was in line with the estimate. The sales number. Q2 EPS guidance coming in line. The range they gave, $1.32, $1.50. $1.35 was the estimate. Fiscal year EPS guidance range they gave also in line. Q1 comps were up 3%.
Okay, so you run up into the report. So Spinner's talking about algos. Agree with Spinner. I agree with Spinner lots of times. The algos here do drive price. Seems like the algos have this written right now. If you run up into the report, you sell off pretty much no matter what. If you sell off into the report, you buy it no matter what. I mean, Lowe's sold off yesterday into the report on different news, and it's rallying. Now you have Target. What were they beat? So Spencer, what was the bottom line?
Yeah.
Did they beat?
Yeah, they beat.
The numbers were pretty good.
I'm sorry. They missed on the EPS. The sales was the sales.
We did have a miss there.
The sales was in line. The Q2 and the fiscal year EPS guidance was in line. Everything in line on the guidance.
Not that bad of a report. Doesn't matter. It ran straight up into it, so that's no good. So stock sells. My one buddy again from Bright was just saying you should just sell, and I've said this on the show too. You should just sell every stock that runs up, 10, 15% of the report, because they seem to always, 3 out of 4 seem to go down. So if you did every single one, you'd lose on the 1 out of 4, but you'd make it on the other 3 out of 4, and you'd probably make money overall. I mean, NVIDIA was a classic example. There was a great report. Stock ran up 30 points ahead of it, could never even get in the green. So these stocks that run up in Target, I know it sold off yesterday, a little bit ahead of it, but man, if you look a week and a half ago, we're at $70, 77. It basically ran up 10%. Before yesterday's. And so it has to blow it away. Did not do it. They sell it off this morning.
All right, and they sold it off all the way down at 69.11. That's your area on the downside, folks. You had a low at 69.17 and 69.30 on May 10th and 11th, so that's your big area of support. Coming back on the upside, folks, I am just going to give you the high of the rebound. That's 71.80, so call $72. Potential resistance, 69 to 72, your potential range in Target.
Other retailers reporting here, and one that is popping a big time here and looks to be making all-time highs. Tiffany, you just can't bring this jewelry company down. Man, this stock is just the honey badger stock of all retailers. I mean, whenever I look at Tiffany's, it's not far off from the all-time highs. I guess for like 2016 it was, but I mean, the last year and a half, this thing has just been pretty much a monster stock. How many retailers are making new all-time highs? Seriously.
I can think of two.
What's the other one?
Lulu.
Is Lulu? Yeah, you're right, Spencer. So you got Lululemon and you got Tiffany's. So you got the yoga pants and the jewelry maker kicking butt and taking names. Tiffany's up 15%. Give us those numbers.
Yeah, lots of like here. Q1 EPS, $1.14, 83 cents was the estimate. Sales $1.033 billion versus a $957 million estimate. Fiscal year 18 EPS guidance raised by 25 cents on the low end of the range from $4.25 to $4.50. Q1 comps were up 10% year over year. Also, a $1 billion buyback plan was announced.
Wowzers. This is a rally. And I always say, if you're short a stock, it's making new all-time highs. I don't want to continue to be short. So I know there's going to be a lot of people that come in here and say, this is too much. This is flying. Yes, maybe it pulls back, but who knows from where. I want to wait for a first red candle before I get happy on the short side. And I'll tell you, it's just a strong stock. It's loved by the market. What is loved is loved. What is hated is hated. And that can continue for a long time. But Joel, I know we're at all-time highs. We're trying to throw you under the bus when we ask for levels and stocks are making new all-time highs because it hasn't been up here before. But give us your thoughts here. What's your
thoughts, man? Oh, gosh. If I had any kind of options or anything, I'd be locking in gains.
Bring in the register?
I would have an offer out at once, right? What now? What's the pre-market high?
117.03 bid, 117.35 offer.
Okay, 117.30, and the high is 117.65. I would be out there 100, let's say I had 1,000 shares. I'd have 100 at 117.5, 200 at 18, 300 at 118.50, and I would just scale up not to get short. I'm talking if I had a long here, I would just be scaling up the size. And then once I start getting lifted on my offer, we weren't taking my offers anymore, then I would just pound it. There's just absolutely, Dennis, 117, we can't even make a bet on this. I mean, I don't even think it's going to close above 115. What do you think?
This could go either way. That's a coin flip for me. I mean, sometimes you think, when you're coming into old resistance, but there's nothing in here. So you've got some shorts that are really panicked here too, probably. So I could see it both ways. Okay. I have no bet here. This is in the middle of nowhere for me. Stocks making new all-time highs. I hate shorting stocks making new all-time highs. I've lost a lot of money shorting stocks making new all-time highs. So, where it opens is always a key. I would write down the opening price. And if it rallies from there, if it comes back through that opening price, that's when you can execute and try to get short. The opening price is so key. We don't know that until 9:30.
What if you just took a flyer and you had 50 of the 110 calls?
I'd be selling the stock against it right now.
Okay.
So if I'm long, and there might be people out there, and I again tell you again and again and again and again, the best way, if you are long options, if you have calls or puts long, I love selling the stock against my options. So let's just throw out a scenario here. You're long the 110 calls. Let's say you're long the weeklies here, and they're going to expire. I don't know if Tiffany's has weeklies, but let's say just hypothetically that it does. So you got 2 days left on it. So that's all pretty much, just now intrinsic value. You sell the 117 short against it. So now you've locked in 7 points. So in a worst case scenario, you're making 7 points. It goes up to 125. Well, that's it. You're short. Your call will be bought in, and the trade's over. But if the stock starts to collapse, and let's say it goes for a reversal and goes through 110, now you start making more money because you're short 117. So now it goes down to 105. Not only have you booked the 7 points, now it's actually down at 105. You can actually buy the stock back, make 12 points. Now you still have your calls. So, and then maybe it whipsaws back up to 115. Now you sell the 115 short against it as well. You're all doing this with no risk. So that is the nice thing. And that's how I've always traded options. The one issue that a lot of people have is they're buying these and they don't have the money to do it. So you got to have the money to be able to do that. I mean, you got to have 117 grand to be able to short, sell to short 1,000 shares, or at least, you have to have half of that with a 2-to-1 margin. You got to have at least, 55 or whatever it is, or $60,000 to be able to do it. But that's the best way, I think, to play these things, is always just to sell the stock against your calls. When I used to trade, and I would, have the options, and I actually would, day trade some of the stuff, I always was doing the stock against my options. And that is just a nice strategy out there that too few of people utilize. They want to wait for 9:30, and they want to wait for that. Like, you can't even sell the option right now. It doesn't open till 9.
I know.
But you can sell the stock against it. And that is the best way to play. And that's how you take advantage of these huge earnings. Get in your after hours, lock in those gains, sell the stock against your calls. Even if you only have one contract, well, sell 100 shares against it. Now you've locked it in. What if the thing goes back to 110 and you don't get nothing because it's at 9:30? So I don't know where it's going, but I'm saying if I'm on the options, I'm selling the stock against my option. If I'm on calls, I'm selling the stock against my calls. And I think that's the best way to play.
And does everyone, let's just take a step back for a second. Does everyone in the chat, both chats, fully understand what Dennis just explained there? Because, it's a very good concept, and he did a great job of explaining it. But it's the best. If anybody in either chat, if you guys don't understand this kind of stuff, or for that most part, if you don't understand anything that we say, don't be afraid to stop the show, because we want to be here to educate you guys, to give you as much of an edge in the markets as possible. So don't be afraid to raise your hand in class and ask a question on that, because we're here to help you guys.
That is just a strategy that too few retail traders utilize. I'll tell you, all the pros do it that way. All your market makers do it that way. They're selling the stock against their options. That's why stocks pin. People think pinning, when we talk about pin action, and I don't talk options a lot on the show because I'm not a big options trader, but I know a lot about it. I traded options for a lot of years too. So, when people talk about pinning, they think, oh, it's market makers manipulating the market so that everybody loses money. It's not any manipulation at all with pinning, and you can Google it and maybe you can find the right answers. You probably find the wrong ones too. People will say it's manipulation. It's not. It's the natural market mechanics that cause a stock to pin. Why is that? I'll just give you a quick example.
Wait, Dennis, don't go to the pin. Could you stop for a second?
Yeah.
Abner's boy from the Google chat doesn't really understand. So could you do like 100 share example in Tiffany here? Right now,
let's say I'm just lucky enough to have, I bought the Tiffany 110 call on a flyer.
And it closed at 0.24. It closed at 0.24.
So it closed at 25 cents. I bought the 110 call on a flyer. So I bought one contract, small little guy. I bought one contract. I spent, 25 bucks. So I spent 25 bucks plus commissions, on a 110. So now I can turn around when the option, right now I can't sell the option. It doesn't open until 9:30. But I can sell Tiffany short against my one contract. So I can sell the 117. I could hit the 117.50 bid on Tiffany right now for 100 shares. Now I've locked it in. So I own one contract of the 110 calls. I've shorted 117.50. So I've locked it in, basically 117.50. This trade is over. I've locked in 750 bucks, because if I just take it to expiration, I don't do anything else. I'm short 100 shares of Tiffany now, because I just saying I was shorted in the pre-market in the hypothetical situation. My call will automatically exercise, and if it closes above there, and then I've locked in the 750 bucks. So it'll exercise. That will cover my short position, and I'll have a zero position after expiration. But what I'm saying is, you have still a wild card. Let's just say Tiffany's reverses and pulls an AutoZone and just dies on the vine and goes all the way down to like 105. Well, you don't have to exercise your call now. You're short at 117.50. Stocks went down to 105. You're up now $1,250. So you kept you've almost created yourself a little hypothetical put below 110 because you're off the board, because you're short the stock. So you start making money below 110. So that's why I I leave that open. And in all likelihood, it's not going to go back down below 110. But we just watched AutoZone up 40. down to, down 60. I mean, if you were selling the stock, if you had AutoZone calls and you sold the stock short on that opening print against it, and you held, and saying, okay, well, if it closes, the trade's over. It went all the way down another 60 points. I mean, you just raked it in. So it's just allowing you to still participate if the stock goes into full reversal mode. If it doesn't, you booked it and you're out. But if it does, and it does, go into reversal mode and pull an AutoZone, you're going to make more money. So in all likelihood, when this thing opens, the options open, they're going to trade mostly at intrinsic value because it's so deep in the money here now. Or maybe, maybe get a little premium, but usually there's spreads on those too. You get into the thinner stocks, you can't even find bids sometimes in these options. Then you actually have to pay less than intrinsic value to actually sell the option flat out. I would never do that. I would always sell the stock against it because there's more liquidity usually in the stock than the options, especially on some of these smaller ones. So it's just another way to utilize your long option position.
Okay, and it's you're covered basically, and you can stargazers make it a good point. If you do this after hours and it gaps up, you're also capping your upside on that. So there are some caveats in it. It's just that, hey, if you buy a 25-cent option and it's worth $7 and you're covered on it. So no, that was a great explanation, Dennis.
And then Rob Hood is saying, is this just shorting a stock and not buying? No, well, if you had puts, it could work a different way. And, this doesn't work in a great example here because Tiffany's trading up. So every the 110 puts are worthless right now. But let's go over to Lowe's this morning. So let's use Lowe's as a fantastic example. I guess we got an option teaching show here, guys. Maybe if you guys like this, let us know. I can talk this stuff all the time. Just because I don't trade options doesn't mean I don't know what the hell I'm doing there either. Lowe's, so 85.75 it closed. If let's just say hypothetically you had the 85 puts. So this morning you come in here at 8:30 and you're like, oh, my 85 puts are worthless. But if you were up at 6 a.m. when this thing started dying, well, those 85 puts had value to them because you said Lowe's went to where, Joel?
82 and change.
It went to 82. So let's say, you didn't get the bottom, but you were able to buy it at 83 this morning. So you would never have been able. So if you had the 85 puts on Lowe's, you would never have made money if you were just buying and selling options and not using the stock example against it, because it's out at 88.50. It's not, your options are going to open worthless here when you have an actual chance to sell those puts. But because they don't open until 9:30, they don't have a pre-market in the options. So, but if you had the 85 puts and you went in the pre-market, I guarantee there's a few people that did this, some pros out there that probably maybe own the 85 puts. You could have bought the stock this morning at 83, locked yourself in 2 points on your options, and now been raking it in because not only did the thing rally back up over 85, it's at 88.5. So your 83 buy is now worth 5.5 points. So you locked in your 2 points. Just worst case scenario, you're making 2 points, but you have the wild card that I'm actually kind of long now the stock. So above 85, I start making more money. It's at 88.50. You can turn around and sell the stock you bought at 83 this morning, lock in $550, and now you have your open options again. So now you're 85 puts. So if it goes in reversal again, you could do it all over again. Now, it's not likelihood it's not going to do that now, but just showing you how much money can be made by buying the stock against your puts as well. I love trading the stock against my open option positions. It's just a full strategy that pros use all the time, and retail traders, many of them don't even realize they can do this. But this is the whole point to options. It's to be able to exercise that.
Flexibility.
And it gives you flexibility too.
Coming out of the pre-market chat, bull for trading. Dennis, are you talking the near-term expiration, using this on weeklies or monthlies or both? You can use this on any option.
No, near term. Because if you're out monthlies, you're going to have time premium you're wasting by doing that. You don't want to sell the stock against it. If it's a month out, you're going to get more for your option than, if 88.50, if you have the, let's say you have the strike on July and Lowe's, well, and you have the calls, you're going to get more than 350 for the 85s right now. There's going to be time premium in there. So you want to be doing this on stock options that are near expiration, like with a couple days where the time premium is pretty much gone. Euchred. I often do this, believe it or not, bull for trade. I used to have the full strategy. I had filters running that I would buy options that had, I was trying to buy penny options, literally for a penny, 1 cent. And I would buy them with an hour to go, just on the wild chance that something crazy might happen, the markets might move. But not only that, and this is what blows people away too, is that you can exercise these options after hours too. So just because the options market closed at 4 o'clock, you can exercise at 4:15, 4:20. You got to call your broker and find out how late you can exercise. I know IB, I think, goes to 4:30. So if you send in your notice at 4:25, 25 minutes after the close, you can actually, exercise an option that's out of the money. So if all of a sudden you're in Tesla and it has, a big move after hours like 4:05. You can participate in that move because you have open option positions that aren't expired at 4 o'clock. They expire on Friday, but not at 4 o'clock p.m. They stop trading at 4 p.m., but they are still exercisable as long as your broker allows that. So you got to call your broker and say, how long can I exercise these for? I believe Interactive Brokers is 4:30. So you have an extra half hour to play with those options. Some other prop shops might be like 5:30. So call your broker, find out, but you can exercise options after hours too that are out of the money.
And we're going to bring Sean Udall out of Quantum Trading Strategies, but this is not the same as Dennis's capture the dividend strategy. So that is correct. This is an entirely different strategy, RD. We'll go over that. Yeah, we'll be going over that. Do we have Sean Udall on the line?
Oh, we're calling him right now.
We're bringing in Sean. Well, ask Sean if he plays. Does Sean play options?
I don't know. Let's ask him. Sean, do you play options?
Yes, he does.
Yeah.
Sean, we just did this huge line, I don't know if you're listening to, where we've just been explaining options for about 20 minutes and selling stock against open calls and buying stock against open puts and just showing different ways to utilize those options as opposed to just flat out selling. If you're long the calls, flat out selling the calls in the open market, sometimes it's better to sell the stock against your calls and participate. I just used the example on Lowe's, saying Lowe's tanked this morning. If you had 85 puts, you could have bought the stock against your puts this morning and actually been rolling it in now because it's rallied so much, it's had a huge reversal. Do you trade options?
Yeah, in fact, one of the things you just described is what I do. So let's say I'm
you
short.
get the professionals in here; they know about this stuff.
Yeah, so if you're short and you catch a whopper, there's nothing worse than trying to say, "Oh my God, I'm gonna make so much money today on these puts, and I'm gonna cover it. I'm gonna go buy a big bottle of bourbon and maybe look at a new Porsche." So the the problem is by the time the market opens and options start trading, all of a sudden a 60-point down move is negated. It's only like down 10 and your puts are basically worth nothing. So yeah. I definitely like to cover a short with common in pre-market if I can.
It gives you that option.
Yeah, I mean, just to keep it real, my favorite, now people do these terribly. So sometimes I don't really like to recommend, but if you're asking what my favorite, where I've made the most money over many, many years, is selling puts. And my greatest put trade ever was, I think so this is all pre-split. I think when Apple was like 480. So this is pre-icon purchase of Apple in 2015. I think I sold like Apple 600s or 650s. And I've done that many, many times, even years before I was selling, Apple 120s when the stock was at 80, or Apple 170s when the stock was at 100. So I don't know what you call that, but selling a put where the stock has a huge amount of room to go to get there. And again, this is probably something you never hear from anybody else, but that's where I've made tons and tons and tons of money. And the trick is you have to have enough money to buy the stock.
That's the biggest thing.
Yeah. Yep. So in fact, I mean, there have been times that stuff got put to me and that was perfectly fine, because even though the stock didn't reach my objective, it had moved about 100 or 120 points in my direction or something like that. So I was perfectly fine, right? I got this huge gain, so if it's put to me, I can just sell the stock and take the gain and buy, there's all those different ways, and then you can roll them, and not to get too esoteric, but that's probably the single strategy where I've made the most money, is selling, what do you call that? Way out of the money puts, or way in the money put. I think it's way out of the money puts. I mean, right now, is it in the money? Right now,
way out of
the name I would probably say, like, I think you could sell Twitter 45 or Twitter 50s right now. Again, you can't do this 3 weeks out. You got to do this months out. But I think you could do like Twitter 50s. And again, if you lever up though, and you do 100 contracts, and you only have enough money to buy 4 contracts or whatever. I mean, you can get buried and blow up your whole account. So if you don't know what you're doing, don't do it. But if you know what you're doing, that can be a huge moneymaker.
I mean, 2 things there, and obviously one is, don't, if you're writing puts, don't bite off more than you can chew. You get a black swan event and you blow out your account.
That's right.
Second way is the way Nick Shaheen does, and Nick, Sean, he's always, if he's selling it way out of the money puts, he'll buy another one to cover himself in front of so if he's like selling like 45 puts on stocks trading 55, and they're way out of the money. He'll buy like the 40s just in case, flash crash happens or, markets collapse, and, then he's covered a little bit too. So he buys a lower one just to protect himself a little bit more.
That's right. But just to keep it simple, I would say 85 to 90% of all the activity I do and have done is trading common stock. But I do like to use options for some juice.
All right, Sean, let's move on. A couple of weeks ago, texted me and said you were getting bullish. And we did have one real good dip after that, but the NASDAQ and the S&P did rebound nicely. And then yesterday you texted me that, your spidey sense was saying to roll out of these calls and or roll out of your long position a little bit and start sniper fire on shorts. To me, a nice key was, you had a potential double top at the time at the SPOOs at 41.25, 41.75. Is it, tell us what made you turn a little bit cautious yesterday? Was it something in sentiment? Was it something in the technicals? What was the catalyst?
Yeah, I would say it's three things. One, sentiment. So, and here's something I don't like. I have a divergent sentiment. So I got a very scary CPC. So that's a put call indicator. So I literally have a put call number. And again, these are all my numbers. Somebody probably can't go find this. This is a sort of a blended thing I put together. But basically my put call number is similar to what it was at the January highs of this year. Now, this is interesting. I don't have my McClellan oscillator numbers are not really meshing up, but otherwise they had been dropping already. So it just kind of feels like, and the third thing is I said, look, I think we got, 400 to 700 NASDAQ higher, right? From where I made the call. Well, we're 500 points. So I don't want to be a pig. We could go higher, but I think even no matter if we go higher, I think we kind of have a shake lower. So in fact, to go higher, we almost have to have a shake lower, but it feels pretty good now that we could have a pretty good retracement. And I'm not as convicted now that we need to go retest the NASDAQ highs of 7,600.
Okay, so you're turning the boat around a little bit. Looking for some shorts here. What? Just give us 2 or 3 of issues on your short list.
Well, Micron for sure. I have to see how it acts. They had really good news. They spiked on the news accordingly. And that's just a stock I just think everybody's kind of being stupid about. So yeah, they have good news, but we've talked about this before. They didn't like it at 10, and now they say it's going to go to 100. I mean, that's just the most idiotic thing in the world. So I'm just going to wait on that one. I'm have it set up. I think things that are set up right now would be stuff like Adobe, maybe Intuit. They just reported. Alti, ULTI. I mean, there's literally a list of 20 software names that are so extended that I think you could basically short them and not really worry about losing that much money. Yeah, I mean, okay, something like an Adobe goes 10 points higher, or is a $240 stock going 10 points higher really going to scare you very much? I don't think so. So that would be stuff. And I mean, you can just say, okay, if Adobe goes, if it goes up more than 15, 20 points, okay, it didn't work. But I kind of think that there's so many of these lined up that they're almost like free money, honestly. Now there might not be free money in 4 hours or 2 days, but these things are just so beyond where they should be. It's
why is Adobe so far beyond where it should be? Is it earnings? Is it PE? What is it? What's the reason?
Well, you have such an extended valuation profile here. I mean, you just one simple number. You got a price to sales ratio on Adobe of 15. A stock I like, which is a name Hortonworks. Okay, this is just one example. Has a price to sales ratio of about 4.8.
What's the symbol on that one?
HDP. In fact, I just bought Hortonworks a few days ago. So then this is like I want to increase my long on Hortonworks and put some shorts against it for the old pair trade. So you got Hortonworks with your.
What do they do? What is Hortonworks?
The best way to say it is they are a big data platform that's like a Red Hat. So they take something called Hadoop, which is to get overly technical. It's like a tool that companies that want to do big data analytics for cheap can use. So Hortonworks is a big player in Amazon Web Services, for example. And so if you want to do big data crunching, you use Hortonworks, you use Amazon Web Services. It's way cheaper than something like a Splunk. That's the easiest way to describe it. And it's like a Red Hat. If you know Red Hat, RHT over time, they basically took what was free, created tools on it, and sold billions of dollars of software, right? So it's a very, very smart strategy. But let's keep it simple. You got a 40 to 40% grower. What's Adobe growing year over year? Best case, I mean, we're talking 20%-ish, right? So you got it's trading to three times. Not, this is 150% or 300% higher valuation name with half the growth. And again, I can find 30 of these right now. And that's why I said they're like free shorts. Your only risk is that the NASDAQ does something crazy and we do a mini 99. And if that's the case, you probably got to have some stops in place. But because Yahoo was a great short at 200 and didn't go to 295. So, but if you stayed short at 200 in 1999, I mean, how much money did you make? More money most other people that era. But the setup is just sort of ridiculous. I mean, again, when I see an Adobe trading 3x the valuation to stocks that have 3 times their growth rate, we kind of lost our minds again. But this has been the case for a while, and this is why.
It is.
Well, this is why since the beginning of this year, a lot of these stocks have had big drops over and over again. So I think if this happens, I think this will be the third big drop these stocks have all had.
I mean, Sean, this market, is really irrational on a lot of different levels. It has been for a long time. What's hot is hot. What's not is not. It seems to stay that way until valuation matters. One day it does. And, I went through 1999, 2000 when, every single thing was going up. And then all of a sudden, in March 2000, it started to burst. And obviously 2001 was just an epic disaster. We're watching the NASDAQ go from 5,000 to 1,100. I mean, valuation eventually does matter, and companies actually need to make money for their stocks to go higher. But it stays irrational for a long time. And, some stocks, are, I think, irrationally punished, like you were saying, and some are just irrationally continue to be bought. So I think, the way you're going about it, pairing them up and maybe looking at, those valuations to maybe come in on some of the lofty ones and maybe to expand on some of the easier ones is maybe the best way to play it.
Well, and here's the other thing too. Again, I talk about fundamentals a lot. I pay attention. If you look at the chart of Adobe, it almost looks like it just doesn't want to go up anymore, right? I don't know what pattern you do this. I call it it's having a hard time pushing the rock up the hill anymore. But even at the beginning of this year at 204, okay, really nice little short, spiked down to 180. Okay, 231, gave it up again. I don't know, this thing just looks like a topping pattern. I mean, we've all seen lots of topping patterns in our careers. This just looks like one. We got a couple black candles the last 2 days. I mean, the home run short would be a break below 205 and where the stock tries to rally on good news and can't rally at all on good news. So I'm just saying, this might be a good trial balloon kind of area here. But this one, Alti, Intuit, again, there's almost so many. Here's another one, Best Buy, BBY. Again, stock everybody hated when it was like 1/3 the current price. I don't know. I don't think Best Buy is doing anything that exceptionally great anymore. They did a great job on a turnaround off the lows. But that's another one. There's a bunch. I mean, basically, I guess you could do a screener and scan for stocks with price to sales ratios over 12 or 10 and just kind of take a look at the charts and take a look at some comparisons.
We have a question from the chat that I want to ask. Sean, what do you think of Cloudera versus Horton?
I actually like Cloudera, but I like Hortonworks better right now. Cloudera had some kind of a miss. They're also in that weird that first year kind of post IPO kind of rough patch that most IPOs hit. They have had a nice bounce. I think the last time we were on the show, I talked about this, and I'm really mad I don't own any from 13. So I should have been buying Cloudera at 13 because it was just a no-brainer. But I like Hortonworks better. They're more mature. The thing about Hortonworks is all the bears said that by now they were going to have mega material revenue growth deceleration. Well, guess what? 2 years ago, they had roughly the same growth rate year over year they do now. So they're actually not seeing hardly any growth deceleration. And again, I just point out stocks very, very cheap on relative metrics. So, here's just a number I think about. I think if Hortonworks were to get bought out, you could get actually more than 100% premium at current prices. So, a good premium is usually 60, 70, 80%. I actually think a Hortonworks buyout would be, again, if you put 10x sales on it, it's over 100% premium. If you put 11, 12x sales, that's about where I think they should get bought out, like 11-ish sales. That would be about 115, 120% premium.
Sean, one more for you, then we're going to let you go here.
Sure.
Do you follow CRY, CRY?
I don't.
Okay. Just your favorite stock. Let's just Twitter. This trading range here. I know you talked about selling some of those in the money puts, which you got to have some money to do. But $34, looks like pretty good resistance here. What's the next catalyst? What do you think, or what do you think about Twitter technically?
I actually think we've seen the catalyst, and I think the catalysts have been good earnings reports that have just sort of been partially rewarded. I think you could make a case for the stock to go quite a bit higher. Again, this was a stock people were saying, they were doubting they were ever going to grow again. And now they're basically pushing, 20-30% growth potentially. I actually think Twitter is going to break. I think they're going to break this 34-35 area. I think the next move's like into the at least the mid 40s, maybe higher. So if it's not trading at 40 before the next report, I'll be surprised. And another good report could cause a big spike. So I like this name a lot. I'm going to close on oil.
I forgot to ask you about that.
I think people are very much underestimating how much oil could rise. And by the way, that's kind of something that always spooks me. When you get oil really rising a lot, I always pull in my bullishness on the market short term too. Even though the market can go up with oil a lot, oil's doubled off lows. And what if it goes to like 100, 110 and gasoline goes to $5 a gallon? It's every time that happens, you almost always get a market correction. I think oil's going to go up a lot.
How come?
Well, there's all these, there's just everything's lining up for it. But the conspiracy, I'll leave on this because it's more fun to talk about. The conspiracy theory is you get the world's largest IPO is going to come. And there's no way in hell that the Wall Street boys are not going to give them nice oil prices to do a $1 trillion IPO. This is Saudi Aramco. So, but like a name like Whiting, 52-week highs, which looks like a huge move. Pull up a monthly chart. This thing was a reverse split victim. So you have 52-week highs in a stock that's still, I don't even know, is it 80% off of highs? Apache, Devon Energy doesn't make any sense at all. Devon's trading like oil's still at 40 and it's at 70. So there's just some weird, like Dennis said it, there's mispricings all over the place. This all this market is right now is trying to navigate all the major mispricings. But I think there's a lot of, we have a lot of global growth and, not everybody's driving electric cars yet. So I think and should oil have never gone to 30? It's one of these things where that if there's a big risk to the market that nobody's talking about at all, it's peak oil. It's the peak oil guys coming out and actually being right again for a while. What does this market look like if oil's 150? I think the NASDAQ has a hard time holding 7,600, put it that way.
We've been on the line with Sean Udall of Quantum Trading Strategies. Joins our show occasionally. Sean, I can't believe we kept you on for 20 minutes. We could talk for another 20 more. We didn't even get into about the market structure questions, but we'll be talking to you again soon. And people love you, Sean. We'll be talking to you next week, maybe.
Oh, always good to be on. Thanks, guys.
All right, 8:55 here. Time flies when you're talking stocks with Sean Udall. 2709.50. I'm hoping to see this thing mid-range on the session, 15.5, Dennis. Do you want to do imbalances or what the Wall Street analysts are saying?
We got 5 minutes, so we got to do it all, I guess. Imbalances are small here, so we'll cover that in the next 30 seconds. I see Square is 65,000 to buy. That's interesting on a day that we're down. I mean, if that was to open flat, might be an opportunity there on the short side. I'm just looking at pretty much small sells across the board. Some of the banks are trying to crawl their way back. Like I said, there's a positive influence here from Dodd-Frank getting passed at the House, but also the negative influence of the market trading down, the TLT trading up. So counter influences there on the banks. We've still to be determined who is going to win that, if the banks are going to show relative strength or not. They're showing a bit of relative strength already this morning. Ratings, Spencer, we got lots of ratings here. Where do you want to go? Because there's a lot of them. Not a lot of huge ones, but a lot of interesting ones.
Let's just run through the list. So
sure.
Deutsche Bank upgrading Nordstrom this morning from hold to buy. We had Celgene catching an upgrade from Bernstein from neutral to market perform to outperform. Those were the biggest upgrades that I saw this morning. As far as downgrades go, we have a Deutsche Bank downgrade at DSW, buy to hold. We have an analyst fight also on Celgene. I mentioned the upgrade from Bernstein, a downgrade in Celgene at Argus from buy to hold there as well. Shake Shack downgraded at Longbow Research from buy to neutral. Red Robin downgraded at Stifel, buy to hold.
That Shake Shack 60 level is just the Rock of Gibraltar. It's looking like it wants to roll over from there. And now we're down another $1.50 on the downgrade here this morning. It looks like it's failing, just like Alibaba up at 200. That was the Rock of Gibraltar too, and that looks like it's starting to fail there too, which is somewhat, something I wanted to mention that on the show yesterday because we had Baidu rolling over, and I meant to mention that, Baba was like 197, 198. I mean, Baidu starts rolling over like that. Sometimes it can drag down some of these other China stocks, and Alibaba looks heavy now too. So you've got big levels that these stocks are struggling to go through. If they can get through them, they'd be in breakout mode. But I think, resistance is resistance until broken. And Baba at the 200 and Shake Shack at the 60 look like they're trying to fail.
Let's take a look at the Shack. Kramer tried to knock it down, right?
He did, and it didn't work. I played along with it. I made 50 cents in the trade, and then, it rallied right back up. I wish I would have reinitiated it up in the upper 59s because now I'd be sitting pretty. I did not. I still like Shack from the short side. I still think would be a seller up in the upper 59s. I don't know if I'm chasing it here this morning, though, because it hasn't paid to chase this on the short side. Always seems to give you another chance. But that being said, I think valuation is ridiculous on Shake Shack. Not that that matters, like we were just saying with Sean, but eventually it might. So I don't know. The growth is not going, and the same store sales are not growing. I don't like the $15. I thought the hamburger was great, but at $15, it was too much, and I left hungry. We gave this argument there about a week ago. Stock really didn't go down since that actually went up about $1, but now it's starting to come down here again. So nothing goes straight down, but I just think it's overvalued here. I just really do.
Someone had been targeting the whole $60 area. High the move, 59.91, another couple other highs in the 59 handle. Sellers stepping down now, and man, I would love to get a shot through this thing going through 57.70. That split the pair lows from Friday and Tuesday. So that now will be your resistance point. I don't think it's even taken out 57 right now. So I don't know. Today, if this doesn't recover early, get back to green, boom, boom, this one could be in trouble. Dennis, I don't want to rub salt in the wound, but Celgene, did they catch a downgrade today, or was that
an upgrade and a downgrade? I felt like capitulation. I mean, that when it went down again from 78 to 74, did not feel like everybody says get the hell out. It felt like capitulation there. Would have been on a Monday's trade, or actually, Monday's trade on the 21st. I feel like the low is in there, but I don't know. I mean, the thing keeps going lower. Valuation is just ridiculously silly on this one too, in my opinion, unless they think that their drugs are not going to make money anymore. I mean, it's trading like 6 times or 7 times earnings. It's one of the biggest positions in my investment portfolio. It's been absolutely annihilated. Like I said, I'm in it from like $29. I bought some more and raised my cost basis to 50, which was a mistake. But, it was a mistake, obviously, not to ring the register at 140 when it got a little bit overdone. At 77, I feel like it's overdone to the downside now. But, valuation, what's hated is hated. It continues to be hated. So the trend is not your friend in Celgene. I think if you're buying at $76 and you look at it 10 years from now, you'd be happy it did it.
All right, guys, you were tongue in cheek. You said you may take a shot at lows at 90. Here we are
up there.
89.76 last trade.
I'm right there. My order's been out there the whole time. Look at this. Look at this market here. 89.90. You know, and it's trading right there at my price, but can't get filled. That's the way this market rolls. Not even joking. That's my price. I can't get filled there, though, because I'm offer on a different exchange. They always route you to a different exchange. That's why this market is crooked. I mean, you know, when you talk about, now I'm getting filled. Why do you get filled at 89.90? Because it blows through at 90. But anyway, so I guess I was trying it at the 90 level. Whole reason is there. I look at that level and it looks huge to me. So I'm trying it from the short side here. We'll see what happens. But I'm now, just as you talked, I'm now officially short lows.
Hey,
gonna be ugly probably. I'm gonna take some heat on this one yet.
Hey, Dennis, I'm gonna stay on for a few minutes here to catch up on some stocks that we talked about and follow up on. So if anything, I'm gonna stay on for another 5-10 minutes here. So if anything comes up or any
I'll hit you with a message.
Yeah, hit me with a message. Okay, Spencer.
What is the catalyst here for lows? Are they saying something on the conference call? This is like the exact opposite of the AutoZone. Here's, AutoZone blows it away, they kill it down, and then they take it through. Now, here's lows, misses, they kill it, now they take it all the way back up. Now they're trying to break it out here through the 90. Was there something said, Spencer? You see anything in the pro on the conference call or something?
Not that I've seen. I mean, I kind of can't listen to it since I got you in my ear, but no.
What are you saying?
No, nothing. No, I haven't seen it. I haven't seen anything.
All right.
Yeah.
Anyways, I'll let you guys go. I'm going to go trade and see what's going on with those lows, but it's a little bit wild.
All right, Joe, where are we starting?
Let's see here. Well, let's just talk about the lows here for a minute. We did come all the way back up here, and 90. We hit 90 and a quarter. Well, I'd love to see what happens at yesterday's high. You had to open at 90.05. You hit 90.35, and then turned around. So I want to see what happens at 90.35. And then really important for this thing to hold the gains off the open. It could just be deja vu all over again. If, in fact, they want to keep running this thing and, you don't have a quick cover, 92.22, that was your February 28th high, and it gets into a whole gap, $4 gap area. So there's your numbers. We will revisit lows before we sign off here. Someone mentioned CMG as potentially overvalued here. Wow, you had the gap and go, and it just kept on going. If you're leaning on any levels, let's just call 450. You had a pair of highs under that, 447.70 and 444.91. Trading down a little bit in the pre-market, 430. I don't think I can get real excited on the short side until you take out 430. Your last three lows are 31.05, 30.20, and 30.60. So there's your big level. In CMG, JC Penney, I see mentioned here. That got hit yesterday. Kind of rebounded, though. What was the range here? You went down to 228, closed at 235. Just kind of hanging out here. What are the lows of the move here? You're right here. You made a new 100-year low in J.C. Penney. The former low was made in November last year at 235. We just hit 228. So potential support here in J.C. Penney. Good old Jar Jar. Jar Jar, are you in both chats? I see you all over the place. He's asking about Red Robin. Not a big fan of their burgers, and I think we have some news on them. So let me go and check out the news.
We had a downgrade this morning. We had actually two downgrades this morning.
Really?
BTIG and Stiefel.
Oh, the old double downgrade after just a bad day yesterday. We are taking down 11 and a half bucks. Are you kidding me? We are trading at 46.55 right now, folks, and not getting much of a bounce. In fact, the low of the session is 46.35. It's just no other news. It's just two downgrades. Holy Toledo.
Well, they had earnings yesterday. I think you forgot.
They had earnings yesterday. Yeah. Okay. Well, now, folks, what I do when we get into these kind of scenarios The dailies don't mean anything. The weeklies hardly mean a thing. I go to the monthlies. And if you go back to February and March of 2017, you had two monthly lows in a 45 handle, 45.20 and 45.35. That's a stick away. If I had a short in, I'd have my bid out there right now, hoping to bring it in. I mean, it's going to have a rally, at least at some point today. But I like the whole $45 area in Red Robin. Mr. TJ, are you new to the chat? I don't think I don't think I recognize that name. You're looking at UGAS. Now that is, I tell you, that natural gas. Let's see here. UGAS has had a nice run and it's continuing higher. Oh man, I don't like it. It's a reverse split kind of thing. Let me look at natural gas here. The actual commodity having a nice run here. We are, let's see here, 3.097. I know that's a long ways away, but maybe you got the gas to get to $3 in natural gas, trading up in today's session above yesterday. Well, no, let's keep an eye on 2.92. Yesterday's high, 2.917. The current high, 2.919. So there's a potential double top. Dennis, a quick cover here on the lows, too much straight. Only lost 11 cents. Good trade, Dennis. Ralph Lauren. Did that have earnings today? Let me go.
Oh, you know what they did? I meant to bring them up and I forgot. But yeah, they did have earnings. They beat on the EPS. They beat on the sales. And that was for the Q4. The Q1 sales guidance they see as being down slightly. And the fiscal year sales guidance also down slightly.
Okay. All right. Well, they're liking it so far here. Trading up 539 at 122 even. It's a little bit of volume here, a higher price stock. We'll see if it can maintains its gains. Now trading 121. I'd be focusing on the pre-market high. That's 122.01. We have not been in this area, boom, boom, since December of 2015. I'm just looking at the monthlies here. I see a high at 127.01, but I bet you if you drill down on your dailies and your weeklies, you can find some other numbers. But keeping an eye on the pre-market high, 122.01. Stargazer from the YouTube chat, NVIDIA breaking down this morning. This is not a good sign here. Trading down $3.10, just off your pre-market low of 39.21. You are getting a gap fill here, folks. If you can get down to 39.19, that's the gap up. I don't know if it was earnings day or whatever that sparked a 9-point rally, but 239 fills the gap. The only problem is if it doesn't hold 239, the low on that day was 231.13. So looking for NVIDIA to hold 239. Dennis, he's keeping an eye on AMCX. Dennis, I meant to talk to you yesterday. I meant to text you. I think it was Leon Cooperman. Spinner, was it? Yeah, there it is. Leon Cooperman was hyping this one yesterday. It's traded down 10 cents. You just had a spike up to 59.47, but now you've backed off. Just trading down 15 cents. Great support at $57. If this was to fall, in sympathy with the market, not one, not two, not three, but four lows at 57 even area in AMCX here. And what else do we have coming from us? Turbine, he's just hopping in the YouTube chat. Welcome. Let us know if you have any issues that you would like us to cover. Spencer, let's see.
Well, there was
here.
one more, a headline from an hour ago that I would have liked to bring up, but we kind of ran out of time for that. But Fox looks like we have an all-out bidding war now because we had a report that Comcast is now preparing or considering to prepare a superior all-cash offer to buy all of the assets being spun off by Fox. to Disney before, and now Comcast wants in on that deal. So they're preparing a superior all cash offer. So we don't know what that'll be, what that'll look like, but we've got an all out bidding war right now for Fox A.
Okay. I'm just going to, I don't know what the price is going to be, and I don't know who's going to buy it, but what I can tell you is like the initial surge. It's had a couple of surges, but this thing has gotten up to 38.71. You're currently trading at 38.16. So you know how these on again, off again, bidder, non-bidder deal goes. Sometimes, all of a sudden the deal comes across at 35 and you're left holding the bag. So I'm looking at 38.71. That was your spike high that you had when the rumors were hot. That's the highest this thing has been in a long time. So that is my level. And let's call it Fox. Comcast has just been getting lit up by a Christmas tree. I've been looking at this one, trading down 31.84, trading down 67 cents. Easier to find resistance than support. Someone really is ganging up at 32.75 area. You had 1, 2, 3, 4, 5 highs in a row in that area. As far as support goes, we're trading down 67 cents. Do have a double bottom from last week at the 31.70 area. So let's see if it can catch some support off that. Interesting stock coming from Stargazer. Winnebago. Remember when crude was, at the high prices, everybody thought no one would ever drive Winnebagos again. Well, they had a rally, but they've been, they have been coming off that major high that they had. It's flat. I don't know. This kind of looks a little bit like a dead cat bounce. I'm keeping an eye on the double top from Monday and Tuesday at 38.80 and 38.85. You absolutely have to bust through that to get some more momentum to the upside. TT Mac, I hope you're taking good notes today. He's looking at HIMX, Himax Technologies. Flat once again. You got a potential double top here. Really like to see a bust through 780. Those are your exact highs from Monday and Tuesday. You also had another high in that area back in early March. Going back to the chat here, Lobster, he is looking at PLAB. It's a good value stock to him. That Photronics, it had a good report yesterday, but it really faded. Was that high made near the open? Let me take a look here. Yep, 985 high, hit $10 and then reverse course. Boy, very important for this to hold 890. If it doesn't hold 890 and it's not that far away from it, you could easily be looking at a gap fill. And if that came down to 850, that was an old triple top. Buyers will be lined up there. But important to hold that low from yesterday. Ed Parker, Elliott Management did offer $160 for ATHN. I know it got an initial pop up that, but the initial pop took this to 158.24. So still some skepticism here. It's faded off that level. So I'm not sure what the likelihood of this going through is. For support, you have 3 lows at 147 if in fact it goes into reverse. Stargazer, do I still like my Kraft Heinz? No, because it's going against me here, but I'm still holding. This is in a portfolio that I like long term. So I'm not going to bail on this one right away. Really would get much more excited about it though if it could close above 60. You had that holding as support, then you broke down, had the rally, and then when Dennis cussed on the show, he said, that was actually 4 days ago that you should sell the blank out of it. And he was right. Let's see here. I'm going to come up with one number here for you. You went from 54 to 60. That's about a 6-point move. Needs to get back over 57 here, or we could be going back down to test the lows of the move. Spencer, you see anything else out there? I need to get a drink of water.
No, I don't actually. I think you covered just about everything that's from the chat. So I'm going to go ahead and wrap the show because that was a hell of a segment there. So on tomorrow's show, we have two guests, one of whom is a new guest, never been on the show before. His name is Vincent Kalima. He was in our office about a month or so ago. He organizes StockTwits meetups around the Detroit area. He's an independent trader. He's gonna talk us through his strategy as far as trading the open is concerned. So he'll be on the show tomorrow at 8:15, and then at 8:35, we're going to be joined by Jeremy Newsom from reallifetrading.com. That's what's on the docket for tomorrow. Thanks to everyone who joined us in our chats today on YouTube and on premarket.benzinga.com. You guys are great. Hope you guys got some good insights on this show today. Well, I hope you do every day. Today's no different. Thanks to Sean Udall, who stopped by for 20 minutes, gave us more than enough time. Always very generous. Thank you, Sean. If you want to catch our podcast, you can do so. iTunes, SoundCloud, Stitcher, and TuneIn. Just search for Pre-Market Prep on any of those platforms. But that's going to be it for us today, folks. So have a good rest of your day, and we will see you folks on Thursday.